Hi traders, my name is Zoran Kresovic. I'm the head of sales here and analyst at Eightcap. Quite busy week ahead for the markets. What I would like to do is this morning is actually run through some figures for the past week and then get stuck into the week ahead, because it does appear to be quite a busy economic calendar and a lot of events unfolding. Last week was actually pretty tame in the markets. There wasn't actually much unfolding. Seems like actually a quiet week altogether, given the past few weeks and the volatility that we had in relation to the banking saga, liquidity issues in the world. So it seems like more of a risk on rally for the past week, as we've seen some strong moves in currencies, some of the commodity currencies, as well as the equities. I'll just run through some major figures. Euro traded sideways for majority of last week. Great British pound showed signs of life after strong inflationary figures. They came up in pound. Commodity currencies were actually winners for the last week because the Aussie dollar was actually up 0.6% for the week, and also New Zealand dollar rallied 0.9% for the week as well. But amongst all, I think the real winner for last week was actually a Canadian dollar, has gone up and appreciated 1.6%. The biggest loser for the past week was actually our risk-off currency, Japanese yen, always considered as a hedge against risk. That actually went down to 1.5% drop. So quite significant drop in yen. Oil, huge news this morning as well. I'm going to get stuck into it and talk about it a little bit more in details. But crude oil was actually up 10% for the past week, quite significant. Outside of the move this morning, which was actually even bigger, and it looks like on the open, crude oil is getting around $85 right now, which is huge news, with OPEC coming out and basically saying a cut in production costs with Saudis and a number of other countries as well. I'll get stuck into that a little bit later on. Precious metals were actually consolidating for last week. In particular, gold was actually only up 0.5%, while silver actually was a winner with 3.7% up for the last week. Gold is actually hovering around the 1,960 level, just below 2,000 level mark, which plays a key significant multi-year resistance level. So any upside, on 2000 level or breakthrough would actually challenge the all-time high. Otherwise, we might see a little bit more retracement over the coming days as well. As I mentioned previously, last week was all about risk on. Equities were actually flying last week, with S&P going up 3.4% for the week. VIX as well rallied 4.3%. So it was quite bullish for the equities around the globe, as we've seen, a little bit more confidence into that space. And seems like obviously quarter end as well, a lot of fund managers are rebalancing the book, doing better window dressing as well to, make those results look quite niche and good. So there was quite a bit of rally as well in quarter end, and equities actually had a stellar run for the past week. So it will be interesting to see what happens this week. On the contrary as well, cryptos, whilst they actually seem to be a risk on as well, we've seen actually quite a sideways move. At the start of last week, actually, we've seen a push in cryptos. Bitcoin, Ethereum ran around 4% each. Bitcoin is actually sitting at this point in time around 28,500 level, and Ethereum is running around 1,820 level. So it seems to be a bit of resistance around these levels. So it will be interesting to see whether actually both Bitcoin and Ethereum can hold for the week. Okay, so let's actually get stuck into a little bit more. So VIX is actually come off quite a bit, as we can see. So VIX is hovering around 20 level mark right now. So that's, quite good for those ones that actually don't like too much volatility. As we can see in the previous weeks, VIX went all the way up to 27 or 28 level mark. So seems like volatility is coming off. I would like to go into the economic calendar for the week ahead. So if you have a look at it on Eightcap client portal website, we've got a new tool called Equity Economic Calendar. It's a sensational tool that you can actually use, in your advantage to basically have a look, what's coming up in the markets, and you can filter it as well. So what you can do is, use the low, medium, high impact events. What I will do now is actually use the high impact events only for the week ahead, because there is actually quite a bit of data coming through. So tonight, out of US, we've got ISM manufacturing PMI data that's coming out, big one for the US dollar. Tomorrow, RBA interest rate decision as well. So that's going to be actually quite a busy one as well. Sitting at 3.6% right now. The market is factoring in another 25 basis points on Aussie dollar. So that would actually take the interest rates base rate to 3.85% as well. We've got New Zealand dollar as well. So New Zealand is previously or currently sitting at 4.75%, and we've got an interest rate decision on that as well. The key event for the week, definitely the one to look forward to, and the one that's probably going to push the market as much as possible, is the non-farm payroll data. So if you have a look at the non-farm payroll data, you can see that previously it came in at 311,000, and the forecast for this month is actually 240,000. However, out of the last 11 meetings on non-farm payroll data that came out, 10 of them actually overshot. So it will be interesting how that plays out, because obviously we've got inflation still running quite hot around the globe. And obviously this will actually play a major role in the USD and Fed making the decision, whether to actually continue lifting the rates or whether we are seeing, a little bit more progress on the deflationary side of things. And therefore the Fed and Jerome Powell will actually start putting rates on hold, but also potentially by the end of the year, cutting rates to bring the inflation to the band which they actually promised to be between 2 and 3.25%. The next chart that I would like to look at is Australian dollar versus US dollar. That's obviously close to home, and what we can see is that Aussie dollar tested that 68 level resistance, but it actually seems to be coming off quite a bit. We're seeing the overall trend to be down, even with the short-term uptrend still in play. 200-day SMA, it seemed to hit it, bounce off it, and now actually hovering sideways before that next move or interest rate announcement tomorrow. The key resistance for Aussie is around 68 level mark, and key support level for this pair is around 62 level mark. So if Australian dollar or interest rates stay as they are, then it would probably be quite bearish for the Aussie, and we could potentially see short sellers come in and squeeze in and try to take that low of around 65.7 level mark. If they lift the rates, we could obviously potentially expect for Aussie dollar to appreciate, and that 68 handle mark resistance would actually play the key role. If you look at the Fibonacci levels as well, from October lows 2022 all the way to the February highs in 2023, we can see that the pair is actually hovering or retracing around the 50 to 61.8 level mark. So that's actually quite significant for the pair. So Aussie, a lot of clients actually absolutely love trading Aussie USD with us because we've got super tight spreads. And it will be interesting to see the flows in and out tomorrow ahead of that major news announcement. The next pair, or the key talking point on the floor this morning or in general over the weekend, is the crude oil. As we can see, oil actually broke up on the upside and gapped up around $80 mark at the moment. So what we're seeing is actually oil is coming off from its March lows and it's starting to commit to a short-term uptrend. I guess the most interesting thing about this is actually OPEC news, which came out this morning or over the weekend, that basically Saudis cutting production in oil, which means that basically there will be more demand for it and less supply. So they're cutting around 500,000 barrels per day, which is actually quite significant. Not only Saudis, but other countries as well, like Algeria, Iran, Iraq, Russia. A whole heap of countries that are producing the oil, like Oman as well, are actually cutting its production levels. And that means that around 1.16 million barrels per day, it will be reduced. So what that means is probably, the price of oil, is actually going to continue probably to go upwards in the short term, or at least it has happened actually this morning. Obviously, big gap on the chart as well from the open. As a technical trader, we need to look at the gaps as well. Technical traders always say that gaps will get filled in at some point in time. Nevertheless, it doesn't mean it will happen right now. I'm not providing any personal advice, but also the resistance level is the key to look as well on oil, because if you have a look at it, we are actually seeing a key resistance on oil around the 84 to 85 level mark. Short-term support around 74 level mark, longer-term support around 66 to 68 dollars. Long-term downtrend line has broken as well, which is generally considered as a bullish sign. So it seems like the actual long-term downtrend has been broken on oil. And if you have a look at the Fibonacci, it's hovering around at 50% of that last major range as well. Central banks in the West is actually concerned about this. They've actually come out with a statement this morning saying this is not helping the inflation at all, and energy and oil are the major drivers of inflation around the world. So what that means is actually that it could potentially hurt everyday households, as individuals would need to spend more money on oil. The cost of living would actually continue to go up. So oil is one to actually watch as well. Inflation is still running hot around the globe. This will not help at all. That's pretty much it, guys, for the week. If you have any questions, please give us a call. Heavy week with regards to the events and news data. Have a look at the equity calendar as well, because non-farm payroll information is below and how it impacts a whole heap of different trading pairs as well. So looking forward to speaking with you next week. Happy trading, and enjoy the rest of the day and the week ahead. Thank you.